Hey, Forex Fortune Hunters, Tom Wilmot. We're going to take some time in a short video to reinforce our buy and sell zone strategy from the room, as well as to add the Fibonacci levels. There have been some questions about how we do it and where they should go and so forth. And so right now is the time for us to review that whole kit and caboodle. All right, so now what we're going to take a look at is the New Zealand USD 5-minute chart from early October. What happened was the New Zealand caught a bid, the Kiwi caught a bid because the global dairy auction went extremely well, and because New Zealand's economy is based upon agriculture for the most part, as well as tourism. When the agricultural economy has a potential to do better, the Kiwi will gain strength in relationship to other currencies. In this particular case, it's the US dollar. We could put it against the Japanese yen. You'd see the same thing basically. And if it isn't too complicated, we could put it against the euro as well. But the euro has other issues with manufacturing and so forth. So we're going to try to go to a neutral ground here and use the New Zealand dollar as our example. Okay. First of all, where is a buy zone? Well, we have three indicators that help us here. The medallion indicates that the 12 EMA is gone above the 24 EMA. The blue medallion indicates the reverse. And you can see we'd come up a little bit. We came back and we took out some. And in this area, we'd have a sell zone for sure. But we went back up and changed around and just basically pittered through the 5 p.m. East Coast time into the Asian session. This is about 9:30 at night East Coast time, which is lined up with the real opening of Asia. 9:30 over in Shanghai and Hong Kong, as well as adding the Australian, New Zealand, and Japanese traders to the party. Okay, so notice that when the T3 is also crossed by the 24, we have all three of our indicators in good order. We have the chandelier breached. The chandelier is a support and resistance indicator. Here's the white support that comes up once that line is breached. And there are other videos about this that you can study in my area on YouTube that would help you with that if you're not familiar with it. But let's just say there are three. We are going to cross the T3, we're going to have an upward medallion, and we're going to have a support white line underneath us. Now that means that we are in the buy zone. And rather than, usually what we do is we'll put a yellow line on the chart to indicate that's the case. In fact, that occurred right after this 8:30, 9:30 time frame in Asia. Now, just to be clear, a buy zone does not indicate that we buy right away. We're going to wait for an optimum price retracement, and this is it right here. Notice that we have pulled back into the bands. We're clear of all of this. We've had some down histogram bars. We've had a stochastic that's oversold. We've had our pullback, and we have a little notch here in our 45-55 RSI. It's not critically important that we keep these. We're going to just get rid of a couple so that it's easier to see the whole chart. But these histogram, the histogram and the oscillators do help us show divergence. Divergence meaning this bottomed out, but this could not breach the 45 level. Okay, so let's just clean the chart up a little bit. Now that we've seen that we had a pretty good move into the bands, okay, so we now know, and we can just keep our eye on this. This is simply the MACD set to either 1019 or 1224, so that it mimics these EMA bands in the price screen, in the price pane. Okay, now the question is, here was our pullback. This is our optimum entry, just using our basic buy zone, sell zone strategy. We know that we have, right below this candle, we know that we have a stop loss area. We don't want to take out this or the T3, but we also have a sense based on the economics that we're headed higher, and this is showing us that this is the case. Now, there are a couple of ways to add the Fibonacci's, and we're going to explore both of them. And for the time being, we'll just put in a couple of ideas for you. This is an attempt to measure where we're likely to go next. Okay, so A to B, that was our original price thrust. We took out a chandelier, so that's our A to B. We pull back into the Fibonacci bands using this drawing tool over here. And notice from a typical Fibonacci chart, I've taken out the 23 and the 76 just to clarify things. So in this range, really it's looking like if we bounce, and we bounced right off the 50, it's looking like we are headed higher. Okay? Now the first stop level, the first area, the first floor on our escalator or elevator to the north is, right here at the 127. And notice how we came to that level. We stopped. We tried to go higher. That's a good sign for later, by the way. Then we pulled back into the bands very, very briefly, having paused at the 127. We've come back into this area, and we're already now in a profitable condition. All right, so what I would do to manage the trade further at this point is I would put my stop loss, I would move it from down in this area down into here. We don't want to go below this swing low. I call it a swing low, this move down into the bands on this candle, especially with the bounce that we had. And now we'd be looking to go higher. The first stop on this particular leg was the 1618, followed by the 200. Another pull back into the bands, and higher we go. Okay, so that's one way to take a look at the Fibonacci. Now, after you've achieved a level, I like to move the Fibonacci area. So let me show you another way to do this. We could either go A to B and then back up to C. Let's see how that works. Just using the Fibonacci's in the direction of the trend. A to B, a pull back into the bands. That's where we established here that we dropped down just briefly to the 618. Notice we went to the 1618, but now we're struggling a bit. We did come back and test it, but then we had to come back into the bands again, test our zero level. Okay, so here we go again, up. Here, right? Move it over a little bit, back to the 50%, and up as far as the 127, this area right here, a pause, and then a move higher. Okay, now that's the upward with the trend way to take the Fibonacci's. Another way you can test is as follows. We'll get rid of these. Okay, simply by right-clicking and deleting on that. Now we can go in an opposite direction. Let's take our Fibonacci's here first. Down we go. A to B. All right? Now, if we were going to have a reversal off of these candles and go down and test, we'd take out the chandelier, and actually you'd see price move in this direction. Okay? But that's not what happened. And notice we came down. We came back through that same range again. Get this up higher so it's out of the way. And notice that at this point, when we had this bounce right here, we came back up, and that's when we lunged up to the 200%, which means that we were from A to B. A to B is twice the distance. It's the same distance. It's twice from here to here, this distance, but it's the same distance as our last push, okay, to the 200. Notice once we've achieved that and pulled back, we go again, A to B, and then upwards into the 200 range where we fell back one more time. Notice that as soon as you get above the 618, that's probably a pretty good confirmation that you're headed higher. Sometimes it will just fiddle around here in the midst of these bands. You could take the trade right here as soon as you saw that nice bounce, however you want to handle it, or you could just stay in the trade that you'd started originally because you know you haven't had any kind of breakdown yet, a meaningful breakdown. Now let's go to the next one. And there we go. And notice we've come up, and just by accident I moved our dashed line here. This is the 1618, and we pulled here. We came up through the bands. Notice the chatter in this area, and then the bounce off the 618 and a move higher. And any one of these, from this particular place here to here, 16 pips here. We had a nice move here as well, back down here from the highest, 22 pips, right? And so trying to pick your spots and see where you get into the trade, 17. So during that particular upward move, just between 9:30 in the Asian session up to the London session, we had a decent series of Fibonacci levels helping us manage our trade. I hope that helps. We'll come back with some more videos with additional specifics and checking to the downside as well. Thanks for joining me. Good trading.